Vivek Saraogi joins us, Managing Director of Balrampur Chini. Vivek, I'm connecting with you after a really long time, so it's good to connect with you. Let's just first start about a very basic question. The news in Maharashtra about rain, monsoon and drought is not great. Official estimates are ranging around what could be the impact of that on sugarcane production and other agriculture production. What is your understanding? I mean, IMD is not calling it let me put it this way, IMD is not calling it a drought, or they're not pressing the alarm bell. But do you think in reality the situation is quite grim and bleak?
Hi Nukunj, good to connect back with you. Maharashtra is in a problem, I think. Basically the reservoirs are empty because last year also the monsoon was subpar. So yes, there is a problem of drought in Maharashtra. I am talking sugarcane perspective, because sugarcane is a water intensive crop. So Maharashtra production is expected to be lower this year. By how much, it's very tough to say before September. So that's when the entire monsoon would have played out and you would have a better sense of the yield.
A shortage of sugarcane, increase in MSP, because if a large sugarcane region, which is Maharashtra, of course it is not as large as UP, I'm just putting it for the benefit of our viewers here. If a large sugar producing region takes a hit, what happens to the aggregate demand, MSP and the demand for sugar at a retail level?
Yeah, so that's a very good question. However, let me begin by the current year's opening stock. We're going to have a lot of stock, about 14 million carryover on the 1st of October 2019. Now assume production falls by 5 million also. So still you will be barely at, you'll still have a million over consumption. Having said that, the government, we are in touch with the government, and with the same government, one hopes the same theory plays out. Be heavy, that would take away some of the sugar. Exports with support would take away, like even in this year, 3.5 million is expected to be exported. So these two playing out, one can see a little bit of depletion of inventory on 1st October 2020.
Saraogi, Maharashtra aside, let's also understand what are the dynamics within the industry, because we've seen a rally in sugar prices as well as in sugar stocks, including yours, because investors are piling up sugar stocks as well, as we've been observing. Do you think this trend is here to stay, wherein we will continue to see both sugar prices and sugar stocks hold up?
The second part is for you people to answer. I believe today is not a great day for the sugar stocks. The first part is,
monitor it on a daily basis,
the inventory would have reached a peak this year. No, you do get information when there is a large movement.
Sure, okay, carry on.
Having said that, in the inventory, 2019, October would be the peak, which I told you would be 14 million. And I hope, let's say it's too early to call it, but things playing out could dip to about, let's say, 10 million next year. That is still a surplus. That is still a surplus. The correct inventory level would be about 6 million, which I would not call a surplus. So yes, you are in a surplus, but I must deeply appreciate the entire policy of the state and the central government. The central government has restricted the sale, has made the MSP compulsory. It has given you the right price for B-heavy sugar, so that if you convert your sugar into ethanol, you are able to realize your cost. It has given you a buffer stock. The state government did not raise the cane price during an election year. And you have both soft loans from center and state. So in a surplus situation, if this is the way it's tackled, I am very, very happy with the recognition of reality. It's not some great, tailwind, but it is stopping you from a serious headwind or an accident.
The outlook then going ahead on earnings, especially realizations and your ethanol business volumes and realizations there, because that's been a big one.
Yeah, so ethanol, we should be able, like last year, I think we bid for 11.5 crores. this year our Guleria distillery will come online. Hopefully we should be able to bid for, hopefully, 14 crores odd. So that should see a volume uptake. The rest of the business, as I told you, with continuation of this policy, one can see, fairly, what should I say, you're fairly de-risked at this point of time.
Sector where, when I started my career, I could almost count 3-4 dozen companies, sugar mills rather, not companies, sugar mills. That has changed. Now the large sugar producing power only lies with 2 or 3 large players. Serious consolidation has happened, serious consolidation. When will we see this consolidation really, migrate into serious profitability for the existing players which are big on capacity, low on debt and large on size?
So as you said, we are very low on debt, so that's our good luck. Having said that, I don't see serious consolidation or power stroke ability to create great profitability through size here. Because there are so many mills which won't shut down, even if they pay 25% of cane price, there's so much cane around. I don't think the government or the banks or the, I don't think they would shut down. I won't elaborate further.
Okay. I won't get into it further, I promise you, because we both know where the challenges are. So for an investor, if one is looking at a sugar business, is it more like a cost plus business where you will get spreads of because of better efficiencies? Because ultimately, what should be the definition of a sugar business? Is it a commodity linked business or is it a cost plus business if one really looks at the 5-year picture?
So I think I really like the construct of the question. I will attempt to answer for Balrampur because that's all I can do. So if you see Balrampur, it is completely integrated. It is further going into integration with whatever little surplus molasses it had. Having said that it's totally integrated, it's very low on debt. We reward our shareholders both by buyback, therefore, and some dividend, therefore condensing the equity, which is EPS positive. With the broad strokes of the government policy known in terms of MSP, in terms of, ethanol pricing, power pricing, which is in a little bit of, sort of a downward trend, but it's okay. So as far as Balrampur goes, you can surely, basically with this policy in place, you can definitely see that it's going to be a cost plus business and the revenue stroke, the profitability is not going to see a nosedive, which you saw some few years back. Having said that, with volumes and efficiencies and integration, there would be a certain amount which would always be on the table, a decent amount.
For you to take debt and increase capacity, is the incentive for you, or are you happy with your 3-year plans where efficiency, low debt and ethanol would kick in? What I'm trying to understand for you that a sugar company is on path to become an ethanol business, but is the incentive for you to expand your sugar business?
Nikunj, I would say sugar business is not a good idea in my mind to be expanded just because you have debt available or you have equity available. You must see the integration of the plant you're looking to buy. You must see the cane quality. I can go deep, but you have to see whether the asset you're buying, merely if it's available at a price is not a good idea. It must have the right cane area. It must have the right integration in terms of machinery. Should we get an opportunity of that kind to our liking, we are definitely open. But am I scouting around and aggressively bidding? The answer is a big no.
On your ethanol,
so if opportunity comes my way,
on your ethanol business, which you are excited about, how will you increase efficiency? Because I have a simple view that India has got some of the most polluted cities in the world. And the only way pollution has to be controlled is that you have to, start blending ethanol at least at a fuel level, which means demand for ethanol is going to be strong. You are investing there, government is going to support you there. But what is the upside for your ethanol business? How will the numbers kick in? Can you throw in more efficiency? Can you increase more size?
So what we are doing, we have, as I said, we'll move from 11.5 to 14. Our capacity would be closer to 18. So we would look to grow more cane in certain pockets to be able to sort of feed that capacity. Maybe at some point if the prices allow, buy some molasses from outside also. So within the distillery, there is not some great scope for efficiency. We would be going in for the most efficient plant, and we are going for zero pollution plants at our factories, zero. So we can ensure that we run constantly, we run without trouble because of our machinery, and we are able to sort of utilize our capacity the maximum. Should any other opportunity, as I said, come by, and when I said I need the right opportunity, it means integration with the distillery and power.
Get a sense from you also on MSP prices, given the context that we've been talking about, any expectation that we might see them go haywire, might see volatility on that front?
I don't think so. See, the MSP is right now 31, which means Maharashtra, if it gets 31, UP is getting around 33.5, which is this 2 rupees a given differential. So I think this is here to stay. If at all at some point it could move up, is our demand with the government, because costs definitely do move up. So I don't see a downward trajectory to this. If at all, at the right time, might see some upward movement.
Okay, Vivek, great to have you on the show. Thank you so much for taking the time out and speak with us.